Hello, David.
Good morning, Tom, and how might you be today?
Might you be very fine, sir. Probably even better if I'd taken your advice last week and gone and bought some more physical silver. My gosh, what a day silver's had so far today.
Yeah, silver was up about $1.05, and gold closed the day on the regular day session at around up $25. So moving on up.
Okay, so what's putting the jets to the precious metals to kick off this week, Dave?
Well, everybody has their own spin to it, and I don't think anybody knows for sure. You know the old saying that the price precedes the news, but a lot of factors involved, I'm sure. And I think one of the things may be the disquietude that's going on about the possible imposition of trading limits on the COMEx early next month that the Commodity Futures Trading Commission has been talking about, and that's just one of many things. But, you know, I have read, can't confirm it for sure, but I think that gold buy that the Indian Central Bank did a couple weeks ago was the largest by a central bank in the last 30 years. That was around 200 tons of gold. So that's a big, big deal.
Let's just step back for a second here. We don't want to get too technical, and we don't have time in our 15 minutes or so together every week to get into the deep stuff. But when you say trading limits on COMEX, what exactly are the implications of that?
Well, it has to do with the number of contracts that an entity can have, either on the long or the short side, whether it's in sugar or soybeans or silver or gold. And, of course, Ted Butler has written for many years on this about the fact that the several large banks acting in concert with the Federal Reserve probably or the U.S. Treasury or maybe even on their own a little bit have been shorting massive amounts of silver, especially contracts. And so now we have the Commitment of Traders report over the last few weeks showing record levels of short sales, on the part of these banks. And what the deal is that they have to buy it back to unwind the trade. And so when you have a situation where they usually knock the price down and then buy it back, and they keep doing that, and they kind of skin the public every time they come in, try to get rising prices. Well, now, if the Commodity Futures Trading Commission says, okay, you guys can only hold so many contracts, maybe 1,500, let's say, then, and maybe they have many times that, how are they going to get out? Because they need to find buyers, and that could cause a price explosion. So that's one of the things that people are thinking about, and that's just one more thing stirred into the mix of an already explosive situation.
I don't want to put you in any legal limbo here or put you in any tough spot, but you've been watching the markets and writing about them with your compadres for a number of years. Do you think in your heart of hearts there's been some front running going on? It's a little shady action in some of these markets from some entities, perhaps?
Well, I think there's been some gray area marketing. Goldman Sachs admitted a few weeks ago that they did something that virtually is front-running by withholding news events for a fraction of a second of making trades before it became known to the general public. And I don't know what definition that would be other than front-running, but I guess it's so gray and not quite totally black that it must be semi-legal.
Indeed. It's quite odd, by the way, dear listener. Apologies. You'll hear perhaps a siren in the background. It seems like whenever there's an amazing economic story, when you're on with us, David, for some reason the siren goes by my studio. I don't know. Maybe somebody's trying to tell us something. Here's a siren for us investors out there. Let's looking at the inflation-deflation argument that seems to be going on over dinner tables around the world. Where are you coming down on that side of the argument these days?
Well, there's definitely a lot of deflation going on because we still have prices of many types of housing and commercial real estate and things like that dropping down, not to mention shopping malls and the volume that they're doing in many of these stores which are shutting down. So we have a very big deflationary environment going on, but at the same time we have an inflationary environment due to a lot of money that's been printed by central banks all over the world going out and finding its own little home. And as Mark Faber says, I think he did one of the best descriptions of this ever. It's like a lot of water or a lot of punch in a punch bowl, and if you slosh that bowl around and turn it sideways, the water goes from one side to another, and it goes in a kind of an unpredictable way, and where that water ends up is where you have asset appreciation. And I like to make a distinction between an increase in value and an increase in price. And I think with the Dow being up 150 points today, that's what you're kind of seeing. The price is going up, but is the value there? That's really a questionable proposition at this point, I think.
Mish Shedlock on his blog reported in the last 24 hours, we just put it up on Twitter here at House Street, his headline, 10 states near bankruptcy. Are you hearing that we have some heavy trading going on with some of your fellow states?
Well, Oregon, which is right next door to us, is one of the weakest ones. It's in that list of 10. And it's really amazing. I was really shocked a couple months ago to find out that they had one of the highest unemployment rates in the country. And so it's just chickens are coming home to roost, and at some point the local governments are going to have to ask themselves, what can we cut back on here and not just move jobs from one department to another. But the tax receipts are down sharply in almost every state in the union, and as you mentioned, there are 10 that are really on the watch list. And, here we got New York back in the news again, and California, a total basket case. So if we don't get an increase in revenues at some point in here, it's going to be pretty spooky going forward for quite a while, it looks like.
Talking about that brings me back again to the markets generally. We looked at, as we talked about a few minutes ago, about silver going way up, and maybe, as you say, it could be something to do with comex or COT, but it could also be that perhaps we get back to those animal spirits. Do you think that the average American that you're meeting down at your local supermarket when you go down to pick up your groceries is starting to pick up the fact that, hey, maybe it is different this time? There's something really heavy-duty going on here?
I don't know if the average American's picking it up or not, but I tell you, when they do, I think it's going to be something else. And it's going to be something that is driven by as much by fear as greed. And there's an argument that the next leg of this market up, whether it's going underway now or whether we get a pullback for a while and we start up again after Thanksgiving, will be driven by fear rather than greed, and that greed number two, and usually it's the other way around. So that makes it a little bit even more scarier,
Can you talk about Dabasir the slave? You brought this up in the one discussion we had about taking personal responsibility. Talk about Dabasir again.
Well, Dabasir is an interesting story, and it's a true one. This slave about 4,000 years ago in Babylon ended up as a slave because he had run up all these debts. And, of course, the problem is usually when you get in a debtor's prison like that, you can't get out because you can't pay off your debts unless you can earn something. But he was literate, and he was able to write cuneiform, which was the pictorial language of the day. He was commissioned by a landowner to write some legal documents on these little clay tablets that they use and then bake. And because he turned them in on time and in good quality, he was told some secrets about how to make money and keep it. And basically the secrets were to take the money that you earn, pay yourself first, pay yourself 10%, and then cut down on your living expenses so that you can slowly pay off your creditors. Well, he did this, but if he hadn't written it down himself, we would never have known about it. But he proceeded to write about how he successfully worked himself out of debtor's prison and became a wealthy man by just employing these rules. And they were dug up in the 1930s by a British archaeologist, and they were the story was put into a book called The Richest Man in Babylon, which is available today. It was written in the 1930s. It's still in print today. And, it's such a simple thing to do. When you pay yourself first, the government takes your Social Security and your income tax payments out first, so you never see them. If you take 10% out, you won't see it either, and over time you'll amass a significant amount of money. So definitely lessons for all of us there today. And if our state governments did that and the federal government,